Hi, I'm Max Keiser. This is the Keiser Report. Markets, finance, and scandals. Oh, so many financial scandals. It's hard to keep track. That's why we've got to bring in Stacy Herbert, our political analyst and financial scandal specialist. Stacy, welcome back to the Keiser Report.
Good to be here, Max. U.S. authorities chase psychic Sean Morton in $6 million scam. So yes, forget the trillions and trillions of dollars of scams that are evident in the collapse of the global economy. They're going after this guy, Sean Morton, who has a $6 million scam. Apparently, he called himself America's Prophet, Prophet, and he claimed to have psychic abilities and can time travel and jump into the future and see what stock prices would be. And if you look at his website, where he was selling himself or trying to find investors, you'll see that it obviously looks like some sort of huckster, and you have to kind of be out there to even give him your money.
Yeah.
But, you know, the SEC is saying that, this man claimed to have psychic abilities, and we say he doesn't. And they say that while he took in $6 million, he only ever deposited $3.2 million. But if you look at hedge funds, don't they take 2 plus 20 of whatever money you give them? Or look at all of the big banks. Some of them say had profits of $3 billion and awarded themselves bonuses of $3.5 billion. So what's the big deal if he only took half of it?
Right. He should be made Fed chairman and take the place of Ben Bernanke. The U.S. economy would be a lot better off because it sounds like the level of fraud that he's engaged in is a lot less than we see in the Federal Reserve Bank in Washington or the U.S. Treasury Secretary, Tim Geithner. But I got psychic abilities myself, Stacy. I'm using my psychic abilities. Yes, I see in the future that there's going to be many more hundreds of billions of dollars worth of debts that will suddenly magically appear on the balance sheets of banks on Wall Street and around the world that we're going to have to be bailed out by taxpayers around the world.
I think you're looking into the past. That already happened.
Mark my words.
Well, going along with this notion of fraudulent scams, putting your money in and not getting any back, is I am not a criminal, insists billionaire behind iSave. This is the billionaire owner of Landesbanki, or the bank formerly known as Landesbanki, and he was interviewed in a documentary, and in it he said, first of all, he marched off the set at the end of it, and he's saying, I have nothing to say, I am not a criminal and never have been. But in it, he says that he was asked, like, what happened to all the capital? What happened to all the money that was in Landesbanki? And he said, when you lose capital in this way, a lot of money goes to money heaven. The value that has been wiped off the stock markets, the deposits in the banks, and investment funds have gone. It has evaporated.
That's right.
It's a common misunderstanding to ask, where did the money go?
That's right. The money goes to money heaven. That's what I've been saying, Stacy, is that we're talking about market fundamentalists. They are fanatics. They believe in, as Lloyd Blankfein said famously, he's doing God's work. So he believes that the money that he is pushing into the economy through Goldman Sachs, all that fiat currency, that money that has no collateral whatsoever, they just loan it into existence. Once it disappears after they've used it to make themselves rich, it disappears suddenly before it trickles down to anybody, and then they claim that it simply went to money heaven. So this is market fundamentalism.
Well, it also makes me think of, you know, how your mother and father might be run over by a car and die and whatever. And the priest or the doctor tells you, well, they're in a better place. And it kind of sounds like, well, you know, your entire pension funds and your whole future and your children's education fund, it's been wiped out, but it's in a better place. It's in money heaven.
Well, it's like Ben Bernanke is the pope of fraud. You see, and all this money disappears. He says, oh, it's gone to a better place. Let's all just join hands and pray that the money will reappear someday.
Actually, 1.5% of the people of Iceland did vote for the referendum. They did vote for the iSave bill, saying they do want to pay these 5.5% interest on this loan to the UK and Netherlands. So there is that, you know, and we always say that this is the wealth and income gap that has concentrated so much wealth into the power of this top 1%. There's a few stragglers there, I think, thinking they might be in the top 1%.
That's right. The top 1.5%, the people who are stealing all the wealth, of course, voted to continue stealing the wealth.
And in fact, the Icelandic prime minister, she says that, in fact, she supports these 1.5% essentially she's saying that because she says the vote itself was obsolete. It was meaningless. It didn't have any meaning because we're still going to do a deal along these lines that the UK and the Netherlands want.
I believe that she's speaking quite glibly and not taking into consideration the descent risk of a population who's now quite angry that they've had their wealth stolen by banking fundamentalist, theocratically driven financial terrorists. And those people are now angry.
So speaking of Armageddon and Middle Ages, we've got Merkel calls for end to speculators who bet against Greece. And the headline almost reads like she's going to put these people on the rack and torture them and take them out or hang them, something almost Chinese-like.
Well, I mean, yeah, let's see some real torture for these speculators. None of this, lame waterboarding, light weekend torture light stuff.
So she's basically calling for a ban on credit default swaps. She says, quote, credit default swaps where you insure your neighbor's house just to destroy it and make money from it. That's exactly what we have to curb. So you see, you're insuring your neighbor's house, not your own house. That's what traditionally an insurance product is, to insure something that you yourself have bought, and you want to make sure that you're not going to lose money on it or, should disaster happen. Credit default swaps, the article points out, are privately negotiated insurance contracts between two parties. So they're not traded on an exchange anywhere. Unlike normal insurance, the buyer can go naked. That is, not owning what is being insured, a situation regulators say is perverse.
Well, what do you want to talk about? The fact that they're naked or the fact that they don't really qualify as insurance to begin with? Let's just talk about the fact that they don't really qualify to be insurance to begin with, because insurance implies that there's some reserve against an event that would require you to pay out. That's the whole idea behind insurance. A credit default swap was invented to get around that very rule and law. There is no reserve on a credit default swap. They're just quants on Wall Street who are hooked on methamphetamine, coming up with mathematical formulas that refer to nothing. It's basically smoking your own belly button lint and calling that a business model and paying yourself a huge bonus at the end of the year. There is no there. There's no cash. There's no reserve. So it's not insurance. So stop calling it insurance. It's fraud. Credit default swap is the global fraud currency. Now, the second part of this, of course, is that they're naked. Now, what does this mean? It means that you're selling something you don't own. That's right. You're selling something you don't own and you're taking the cash. So, but Stacy, they're naked. It's perverse, but isn't this global economy basically nothing more than an orgy of perverse, incentive-driven, financial, what would you call them? Well,
you're saying they don't actually own any of the underlying product, the asset they're insuring. Now, the bond, they're buying insurance or selling insurance on the bonds of Greece, which we know are also based on fictional exchange rates backed on their currency swaps that Goldman Sachs. So there's nothing there. It's all fake, and it's just as fake as Sean Morton's psychic abilities to read the future and look at the stock market. What was real in the Greek situation? What is real there?
Well, exactly. It's a fantastic point. There is no reference to anything that has any value that you could actually mark to market. It's just more debt. And as they continue to lie to people and say, well, it's just a matter of the IMF coming in or the World Bank coming in or some other banking tranche coming in, all they're saying is you can just pile up more debt on top of the existing fraud. It's a market made in fraud. And this is what the people in the press, I just talked to a radio station in Athens about this, and they kept asking me the question like, well, how are we going to get out of this? And the answer is you can't get out of it because you're in basically a black hole of debt where all the solutions put forward by these governments is to increase the debt. So they're just throwing gasoline onto the fire.
And finally, I might add that the naked and perverse aspect of this is that Warren Buffett, billionaire investor, one of the most famous investors in the world, has said always famously that it's when the tide goes out, i.e. when the global economy recedes, the markets are falling, that you find out who's not wearing any shorts, i.e. who's naked. And in this case, it looks like everybody's naked, whether they're short or long. There's no underlying assets. They don't own anything. They're just betting on everything.
Yeah, plus the tide looks like it's never coming back in. All right, well, Stacy Herbert, thanks so much for being, once again, on the Keiser Report.
Thank you, Max.
All right, when we come back, I'm talking to Joe Wiesenthal over there at BusinessInsider.com, so don't go away.
A country house standing on the village's outskirts, with tight security, and in which window lights are never turned on. What are these walls hiding? Revealing European secrets of the CIA on RT. Every month we give you the future. We help you understand how we'll get there and what tomorrow will bring. The best in science and technology from across Russia and around the world. Join us for Technology Update on RT.
All right, welcome back to the Keiser Report. Joe Wiesenthal, he's the deputy editor of Business Insider, which Stacy Herbert says has the best headline writers of anybody on the web. Joe, welcome to the show.
Thanks for having me.
All right. You say that the Greek crisis is over.
What I mean by the Greek crisis is over is basically that for the time being, this is what's basically happened is the governments of Germany and France have given their own banks the sort of wink-wink, we'll bail Greece out. They haven't said so specifically, but what it allows their banks to do is buy the Greek debt that Greek has to roll over. So on a temporary basis, the crisis, I do think, is over. Like in terms of the dramatics, we're not going to see anything in the short term. Basically, the strategy is double down, get the banks to keep buying Greek debt and hope that the problem kind of goes away. But it's actually what we did with Bear Stearns, and it's what we tried to do early on in the U.S. crisis. Just keep doubling down, keep hoping that the crisis would go away. And when I say the Greek crisis is over, I mean temporarily, but in the medium term, perhaps by the middle of the summer or by later, the math just isn't going to add up and we'll be right back to where we are. However, right now, in terms of the scariness that we saw in the last 2 weeks, I do think that's about to subside.
Okay, now that's an interesting point because let's talk about this a little bit. It seems that there is a never-ending supply of mystery debt that these banks and these governments keep finding under a rock somewhere or in a special purpose entity account or some off-balance sheet vehicle engineered for them by Goldman Sachs. And the net result of all this discovery of all this heretofore unknown debt is on a macro picture, you could call this is really what's driving deflation, isn't it? Because the risk to this global economy is more deflation than inflation because they keep finding hundreds of billions and sometimes, we can say trillions dollars worth of more debt.
That's right. I completely agree. I mean, all these assets that people were counting on in some way or had hidden somewhere are just kind of vanishing to nothing. They're discovered and then they're stomped down. I do agree the big risk to the economy is deflation. Granted, it's a mixed picture and it's kind of how you define terms because there's no doubt that the Federal Reserve and the ECB continue to print money like crazy. So in some sense, yes, the central banks continue to devalue their currencies, or same especially in the UK where the pound just hit a new low against gold. But yeah, the big risk in terms of money just getting sucked out of the system that was assumed to be there, absolutely, the deflation story is definitely not over. It's probably just been put on hold. You can just look at the history of Japan battling with deflation now for some 30 years. Every once in a while, there's some optimism. The government thinks it can tighten money, but in the end, it continues to go in the same direction.
Right, so they keep printing money, but it keeps getting gobbled up by this black hole of debt.
Right.
And so the people looking at the increase in certain money supply numbers keep saying, look, it's going to be inflationary, it's inflationary, but they don't, they're failing to take on board the fact that there's this huge unaccounted for black hole of debt. Now, in the case of...
Right, there are all these holes in that cash is just filling it right up, disappearing right away.
Right, so at some point, the cash into this sinkhole of debt, there'll be some equilibrium. And at that point, there would be hyperinflation because the genie would be out of the bottle. When that point comes, it's hard to determine because we're still not even halfway through the discovery of all this debt. And okay, we'll tackle that one another time. But let's talk about Greece for a second and talk about Merkel and Sarkozy, and in particular Merkel over there in Germany. She's saying that Greece's problems are in part due to speculators attacking the country. The idea that financial instruments now have been weaponized, to paraphrase Warren Buffett, who called them weapons of mass financial destruction. Is this an accurate description?
I personally don't think so. I mean, I think this is basically what you saw, what you saw the Wall Street chiefs say, what you saw everyone say whenever there's a crisis in a country, speculators are blamed. That's not the view that I have. I mean, I'm certain that at times speculation or herding behavior can exacerbate a situation. But in the end, these leaders have really no one to blame but themselves for their crazy spending, for their dysfunctional government, for the corruption. I mean, that's what this is really all about in a lot of the situation. The spending is one thing, but look, the U.S. is spending like crazy, and we haven't yet got to the point where there's a danger of us being able to roll over our debt. That might happen at some point. We're not quite there yet, thankfully. But the reason why some of these other countries are in this situation is no one trusts the government anymore. They've completely lost credibility. They're corrupt. There's no sense that they can fix any of their own problems. That's not the fault of speculators. It just isn't. And so this is just a common thing. When you're in trouble, blame the speculators. Hope that if you can clamp down on credit default swaps or what have you, that will solve the problem. It won't. Actually, laughably, the most ridiculous thing that came out of Europe last week was this idea that they were going to blame the ratings agencies for downgrading the debt and have some sort of their own Euro-wide ratings agency that could paper over the problems that they have and make them go away. Obviously, that's not going to work. No one's going to believe that. But again, it's all about blaming other people, shooting the messenger, basically, rather than owning up to one's own problems.
Well, in terms of the speculators and blaming the speculators, of course, what we see is that the government agencies or the governments, they tend to then attack individual pieces of the speculative pie, and they don't really attack the whole speculative industry as a whole. So during the banking crisis in 2008, for example, they would selectively ban short selling on certain stocks at certain times, and then reverse the ban and then implement the ban. And they just actually made the situation a lot worse. It really looks as though these government leaders are financially illiterate. They really have no idea how the system works at all.
Yeah, they don't have any idea how the system works at all. There's never been any evidence that banning short selling had any benefit. It's certainly, I mean, you could just go back to the specific days when we had the short selling ban in place as it applied to financials. It didn't do a lick of good.
I'm of the view that most of the speculative products that have been invented going, past 1971, 72, starting with the whole modern era of financial derivatives, that over the past 10, 15 years, the tail is starting to wag the dog in a lot of ways. The speculative money is driving much of what's going on, and much of the, for example, in the S&P 500 or the Dow Jones, we know that most of the profits reported by the U.S. corporations are coming more and more from the financial side of things. I think upwards at 40% of all profits coming from financial institutions. So the underlying base of manufacturing and other aspects of the economy have been crowded out by speculation.
Yeah, that's absolutely right. I mean, we had an early canary in the coal mine with Enron, a company that was once just a company doing energy pipeline stuff, and then basically got completely subsumed by the trading side, the speculative side, and, if you're the managers of these companies, why do you even bother with these low-margin, old-fashioned pipelines and energy marketing when you can just trade and make way more money at much higher margins? So absolutely, so many companies have been lured by the profits of trading and speculation, putting real business to the back burner, that we obviously have a lot to undo to get back to any sort of stable economy.
Right. So, when I was working on Wall Street, basically every corporation has a guy who handles their cash management account, and that guy usually, for many years, they just roll that in treasury bills or something plain vanilla numbnuts product. But that cash desk became a profit center, huge on Wall Street. And then as this guy started to be exposed to more of these esoteric products, the cash desk took over the entire company. And the classic example, of course, being General Motors Acceptance Corporation, GMAC, which is a lending facility, by far making tons more money than General Motors, the car company. So the cars became a loss leader, while the tricks on the cash desk with their lending facilities became the profit center.
The funny thing is, before the crisis, going back to like 2005, 2006, people actually used to extol GM and say it's a good thing. So you'd point out the decline of their car business, and they say, oh, you're totally missing the picture. You don't understand. This isn't a car business anymore. This is a financial company. They're in home lending, stuff like that. And people actually said that as a good thing, as if that were evidence that the company had evolved, not evidence that the company had completely lost its way and was about to blow up. And you see this elsewhere. I mean, you saw what happened with CIT a financial company that used to be involved in very boring products, just sort of lending money to retailers to cover cash flow, stuff like that. And then they went crazy and got into all kinds of subprime lending, other stuff like that, and then they blew themselves up. So it's a pattern you just see repeated over and over again.
Yeah, the problem is the economy becomes a monoculture, and you have the risks of a monoculture. You know, if you only have one strain of corn or potatoes, if a disease comes through, it completely obliterates the crop.
Right, everyone's in the same business.
And increasingly over the past 5 years, everyone's into the same trade. So you have these huge lopsided trades where you've got these enormous roiling market where, you know, oil was up to 147 and then crashes down to 47 because everyone's playing the exact same trade and nobody's actually doing, you know, working for a living. They're not manufacturing anything. They're not saving. Okay, let's move on to the U.S. and we don't have much time. We only have a minute left. But can you just, your feeling is that the U.S. economy is now on the mend. It's on the recovery. Let's talk a little bit about that.
Well, temporarily. I mean, I wrote last week, for the first time in a while, consumer credit expanded. Again, this is just temporary. I still think our leaders are making very bad decisions, putting off our reckoning, encouraging us to get right back into the spend at all costs mentality, which in the long term is only going to be damaging. But, I mean, we can't, we can see these far-off crises coming, see inflation, see a debt crisis, but that shouldn't blind us to what's happening in the short term, which is that all of a sudden hiring is beginning again, or the firing is just about stopped, and consumers are starting to spend again and take out debt. And in the meantime, the market is going to love this, and politicians will extol the recovery. So it will happen. There's signs of that. I don't think it's lastable or sustainable. I still think we're on this sort of steroid sugar high recovery, as some folks have called it. But in the meantime, I think we're kind of on an upswing for the moment.
Right, as a trade. Okay, as a trade.
Right.
Yeah.
And the thing I think that is important is we don't know how these things are going to last. Like, you and I can discuss that in the long term or the medium term, we're going to have serious problems again. But it doesn't mean that they're going to happen right now. And I think the mistake a lot of folks make is assume that because we can see a bad scenario playing out, that's going to happen right away. It may take a while. It may take a few years for some of these new developments to unfold. And in the meantime, it might feel like we're doing okay.
Okay, but you're looking at the short term, and you've got a very successful website, businessinsider.com. I encourage everyone to go to that website. It's a great website. And a lot of people who go to that site are looking for short-term trades. But, Joe, I mean, when you've got people who come out of the short-term trading environment of Wall Street, guys like Hank Paulson, who then end up as Treasury Secretary, aren't they bringing their short-termism into the federal government, who then becomes basically a proxy, it becomes a hedge fund?
Unquestionably. I mean, our politicians are completely short-term obsessed. They're all basically obsessed with what happens between now and November during re-election, and it doesn't matter what happens in November, in the middle of November, because by then they've already gotten re-elected and have another 2 years to worry about it and raise money. So I think they're going to do everything they can. There's no chance they're going to slam on the brakes. There's no chance they'll do anything but offer more spending and cheap money and however else they can subsidize the GSEs, Fannie and Freddie, until then. So absolutely, I think our politicians are completely short-term focused, and the long-term damage is going to be pretty monumental when it all comes home to roost, so to speak.
Right. So Barack Obama, people think that he's got some plan for health care, but at the end of the day, he's just looking at health care stocks. And if he says something that makes them go up, he thinks that's good. And that's why, unfortunately...
Right, absolutely. And that's the biggest lie. I mean, the short seller Jim Chanos recently said he was going in, he had shorted the healthcare companies because he actually thought that Barack Obama was going to have some principle and try and reform the system, and now he's abandoned that trade because he realized that there's it's just another gigantic sellout. Right.
So the hedge funds even are who live in the country as well. They have to live in America as well. They don't want pitchforks and torches in the streets burning their homes down. No. They would love it if Barack Obama actually thought of the medium to long term and it wasn't just a short-term day trader with, making policy into an options market, quick gain.
That's right.
Now, Chanos, of course, famously kind of went short. He went short on Enron, right? And really was the first guy.
That was kind of where he first made his great trade, was on Enron.
Right. And typically the short sellers are excellent at ferreting out these problems in the economy. And
Yeah.
so on that side of the speculative equation, if people actually listened to the speculators, they do have something to offer, but typically they only listen to them when it's in their short-term interest to do so. So once again, you've got this arbitrage
right.
between short-term and long-term interest, which for speculators, it's a paradise. Unfortunately, not everybody has $1 billion to speculate with around the world,
That's
and
right.
everyone else seems to be subsidizing the speculators. Okay, that's all the time for we have. Joe, thanks so much for being on the Keiser Report.
Thanks for having me.
All right, and that's going to do it for this edition of the Keiser Report. I want to thank my guests, Stacy Herbert and Joe Wiesenthal of BusinessInsider.com. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.